Good afternoon, everyone. Warm welcome to the DiGiSpice Technologies Q2 and H1 FY23 earnings Zooms webinar. We have with us Mr. Sanjeev Kumar, co-founder and CEO of Spice Money, Mr. Rajnish Arora, co-founder and Chief Product and Strategy Officer, Spice Money, Mr. Sunil Kapoor, Director and CFO, Spice Money, and Mr. Vineet Kishore, CFO, DiGiSpice Technologies. Before we begin, I would like to state that some statements made in today's discussion may be forward-looking in nature. The actual results may vary as they are dependent on several external factors. A statement in this regard has been included in the results presentation sent to you earlier. We will commence the call with the management taking you through the operational and financial performance of the period under review, following which we will have an interactive Q&A session. I would now like to invite Mr. Rajnish Arora to commence the presentation. Over to you, Rajnish.
Thank you, Shiv. Hi, good afternoon, everyone, and a very, very warm welcome. Thank you for taking out the time to listen to our story. Can we start the presentation, please? Yeah. So this presentation that we're going to run through is available on our website. Hope you got a chance to go through the same. And I would also like to state that some of the slides in the presentation which talk about our strategy are repetitive. I mean, some of them were there in the last quarterly presentation also. But since we get new audience every time, we thought it will be good to kind of include them in this quarterly presentation. So what we'll do is we'll not spend too much time on those. We'll just quickly run through, and so we can get more time on the Q&A. Yeah, next slide, please. Yeah, so as you are aware that DiGiSpice Technologies is the listed entity, and we have primarily two businesses within that, or two segments, you can say. One of the segments is a rural fintech platform called Spice Money, and the other is a digital technology services business. On an overall basis, 90% of our revenues, more than 90% of the revenues come from Spice Money or the rural fintech platform. And the other segment contributes less than 10%. For the purpose of our today's discussion, we'll focus on the Spice Money business. This is something that the management has been focusing on and growing over the last 2 to 3 years. Next, please. So just the overall numbers. So as I said, Spice Money, we are a rural fintech, and therefore we serve rural and semi-urban areas within the country. Just some high-level numbers. We have about 1.5 million or 11,50,000 adhikaris on our network. These adhikaris are local village merchants and entrepreneurs who help serve customers within their village. On an annualized basis, we are clocking a GTV of about 1,63,000 crores. So this is the annualization of the current quarter gross transaction value. In AEPS, which is a Aadhaar-enabled payment system, which is our key or a hook product, we clock 17.2% market share, and we are leaders, in this particular product category. On a coverage basis, we cover about 6,400 blocks. So by blocks, we mean small towns. So if you look at the country administratively, it is divided into about 700 plus districts, about 6,400 blocks and 6 lakh villages. So we are present in almost all the 6,400 blocks within the country. And out of the 6 lakh villages, we are currently serving customers in 2,17,000 villages. And from a PIN code basis, we are present in most of the PIN codes, that the country has. So our objective is to achieve deep penetration right at every village level. Yeah. Next, please. So I think we all know that overall India is really expanding when it comes to the digital payment ecosystem. As per some reports, by the year 2026, about 65% of penetration will be reached by the digital payments. And however, what is important to note is that what has driven the growth till now versus what will drive the growth for the next billion users, I think the parameters are going to be different. I think addressing frauds, building customer trust, simplifying the customer onboarding, improving the economies improving the whole economic model around payment players, and further enhancements in the digital infrastructure. These are going to be the key drivers of future growth. And we believe that when it comes to enabling customers with simpler onboarding and enabling trust, I think we believe that we will play, as Spice Money, we intend to play a significant role there. Yeah, next, please. So we all know that, I mean, India's economy for some time now is being propelled actually by the rural market. Rural is now seen as the, relevant market for driving India's growth in many segments. Just few numbers on this, 46% of the national income is today contributed by rural economy. 35 crore people are employed within rural India. And all of this, the rural banking revolution has been brought out by a jam trinity called Jan Dhan, Aadhaar and mobile. So everyone having a bank account, everyone having an Aadhaar, and everyone having a mobile. That is what has kind of been the building block of enabling financial services to rural. Next, please. Now, having said that rural is a large opportunity, it's also important to understand that the rural market has very, very different characteristics from the urban market. Whether in terms of how people shop, how do they take decisions, what are the kind of ticket sizes that they deal in, whether they need assistance or not. So on all these parameters, the market characteristics are very different. And therefore, the approach to solving or accessing the rural opportunity has to be very different than urban. And therefore, it means that it could be a different go-to-market strategy, a different user experience, different products, and a whole different community-led business model, which is the relevant model for accessing rural opportunity. Next, please. So at Spice Money, what we've been doing is we've been leveraging all the public good digital stacks, to enable access to rural India. So whether it is the Jam Trinity, whether it is, AEPS, which is, built on Aadhaar stack, UPI, or Bharat Bill Payment System, or Umang, which is a government to citizen platform, all of these platforms or digital stacks we've leveraged on to solve for access. And we're very bullish about all the new emerging stacks to further help us solve more problems within the rural India. So whether it is open network for digital commerce or open credit enablement network or account aggregator, all of these we believe are going to further help players like us to use these digital stacks and therefore enable more services, whether it is commerce, credit, healthcare. These stacks are today emerging. So net, we are going to democratize financial and digital services for the underserved using all of these stacks. Yeah. May I now request Sanjeev, if you can take us through the next slides, please.
Thanks, Rajneesh. Good afternoon, everyone. Thank you for joining in. What I'll do is over the next few slides, I'll focus on explaining the Spice Money business model and also touch base on key business metrics. Can we zoom in, please, on the slide? Thank you. Our business model, what are we building? We're building a super app for Bharat. In this slide, on the left these are services which are live, the basic banking, payments, travel, and collection. On the right are the services that are as a roadmap for our planned launches. At business model, if there are two big building blocks that I can convey to you, what is the business model hinged on? The first is building this network of entrepreneurs in rural India at a village and a block level Second, who's enabled with a technology platform which is provided by Spice Money. A combination of this is what is used to offer services of financial and digital services to 1 billion rural Indians. That is the business model. What we also do, we use this data on the platform to innovate, design new products and services, particularly catered to rural India. Next slide, please. If I extend the last slide, the way I was saying of how we're building the super app, and let me then focus more detail on that, is if you look in this slide, the middle, so we have these entrepreneurs whom we call Spice Money Adhikari. They use an app. They are at a village and a block level. On one side, we have service partners whose products and services are integrated on our platform, who are wanting to access this set of 1 billion rural Indians and have not been able to access till date, and there have been many reasons for it. So we come in between. On our platform, these product manufacturer service partners get integrated with their products. Our entrepreneurs use our platform at a village and a block level to provide services to rural India across all the services that we spoke about in the Fiscal Lab, the financial and digital services. So in very simple words, if you were to look at it, we believe that this model is a win-win for everyone. A product manufacturer who was not able to access rural India, the Spice Money entrepreneurs who are in the community, who've been living there, who've been working there, they have an alternate income, additional income, and third, rural consumers who didn't have access to these products and services just because of the infrastructure problem in rural India. Next slide, please. We've spoken about this slide in the last call also, and I want to take some time to reiterate this. Spice Money is headed to a larger opportunity, and let me explain what I mean when I say this. Fundamentally, what are we trying to do? We're solving an access challenge in rural India. Right? 1 billion rural Indians there is an access challenge of a lot of products and services. Can we, using technology and entrepreneurs in rural India, solve that? What have we done? We've built in the last few years, what we've been able to do, we built the largest ATM banking network. On this network, now we're building the largest collection network. On that, we're building the largest banking and financial services platform. Then after financial services, we will also build the digital services. Travel, we already started. There are other services, e-commerce, healthcare, G2C is what we'll go live with. And then we'll also have a direct-to-consumer platform, which is for the rural consumers who will go digital faster than others. That's the larger opportunity that we want to be chasing. Next slide, please. Sorry, can you zoom in on this? Yeah. Let me cover some key operating metrics. There are 4 of them here. The first is the network, whom we call the Spice Money Adhikaris. We are about 11,50,000 Adhikaris now on a net at Spice Money. On a YOY basis, we've grown about 43%. On a quarterly 7%, obviously, this is also at a much higher base. The customer gross transaction value, the second key operating matrix that we measure here, has grown 26% on a yearly YOY basis. However, on a quarter basis, I must point out that it has degrown by 5% from a 26,000 crore last quarter to a 24,000 crore in this quarter. Because of the degrowth in customer transaction value, the GTV, the service fee, the Spice Money service fee, this is the third operating matrix, has also degrown by 5% in this quarter. So 103 crores of service fee revenue in Q1 of this year has degrown to 98 crores. However, on a YOY basis, we've continued to grow at a over 20% ratio. The fourth key matrix, which also is very important for us as we build this business line, is the APIS market share, because like I said in the earlier slide, what the first step we took was to build the largest ATM banking network. And that market share has been growing. If you look at the last 3 years, even this year, the H1, from a 16.4%, what we closed in March 23, we're at 17.2%. So we'll talk about the GTV degrowth in the next few slides, but what is definitely important to highlight is the market share. We continue to grow as we build this business. Next slide, please. So I'm carrying forward the customer GTV business now into different services. I want to touch base about 6 of those in the next 2 slides. The first is ATS, which is a lead product as of now. The ATS GTV, the gross transaction value, has declined by 9% on a QoQ basis. But this is in line with the ATS offers. Industry has also degrown by 9% in this quarter. The breakup has been a 5% in ticket size, and also a 4% in volumes. However, APS GTV on a YOY basis, we've grown 23%, and we've also grown our market share. The MATM business has also degrown this quarter 8%, but driven primarily because of a ticket size per transaction, which is not one-off. It happens in certain quarters. The bill payments, however, GTV has witnessed a growth of 60% on a QoQ and more than 100% YO. The bill payment here is broken into 2 parts, which is one is EMI collection, and the other is what I call utility payments, all payments. Those are the 2 boxes. The breakup of the 2 is what we see in the graph of bill payment. Next slide, please. CMS, the cash management service business, that's grown on 11% on a QoQ basis and a 76% YOY. And this is primarily, like we had spoken about earlier, in the cash collection business. We're onboarding more and more new enterprises on our platform for collection at our network. Travel business has also grown this quarter on a 5% QoQ and a 19% YOY. Obviously, because travel is coming back to normalcy post-COVID. Recharge has seen a dip of 5%, but primarily because of a drop in ticket size per transaction. On a YOY basis, there's been a growth, primarily driven by the growing network of Adhikaris. That's all on the business side. I'm going to request Sunil now to come in and take us through the financial metrics, please.
Good afternoon, everyone. Zoom in, please, the slide. Next slide, please. So in this slide, we are covering about the Spice Money. That's a financial technology business. And having the summary financial highlights on the left-hand side, we have a year-on-year numbers, how we have grown. And in the middle, there's a quarter 2 results in comparison to the previous quarters sequentially and last year same quarter. And on the right-hand side, on the extreme right side, we have a H1 results in comparison to the previous year's same H1. So I'm covering it the quarter 2 results. As Sanjeev has covered in his slides, there is a drop in the GTV of APS quarter on quarter due to degrowth in the APS office industry by 9%. Thus, our revenues and the gross margin, service fees revenue and the gross margin has also dipped on the same line. And if we see that on the indirect cost side, we have continued to invest in the both capacity and capability of the organization, network reach and technology, and brand as well. Further, we also continue to invest in the new products offerings to kind of have a operational efficiency, operational leverage. And in this quarter, the EBITDA is negative of 50 lakhs due to these two factors, the investment in the indirect cost, and there is a drop in the industry numbers on APS, which is a prime product for us. That's a cash out product. And so the impact on the EBIT. However, there is a year-on-year growth is there 35% year-on-year growth in the customer GTV and revenues. And consequently, the gross margin has also increased by 50%. So that is coming that we can see in the H1 in comparative of H1 financial year 23 versus H2. H1 financial year 22. So next slide, please. This slide covers the same format for the consolidated numbers as it was in the previous slide. This has a fintech segment and the other segment. Fintech segment we have covered in the previous slide. And here the other segment, though the revenue has grown in the quarter 2 from in comparison to the quarter 1, from 12 crores to 17 crores. However, the gross margin due to the product mix was on the same trend. And consequently, the indirect cost EBITDA is also on the same line. So there is not much change with respect to EBITDA, EBIT, and indirect cost. And thus the consolidated results for the quarter is a EBITDA loss of 6 crores versus the previous quarter. We have done a EBITDA of 1 crore due to the factors we have explained. And here on the right hand side, H1 numbers also have an EBITDA of 5 crores in comparison to the previous period, 11 crores. So the reasons are primarily the same. That's all from my side. I'm handing it over to Shiv.
Yeah, hi, thanks, Sunil. We'll now start the Q&A session, and I would request all participants to name themselves and the organizations they represent before asking their questions. And before asking questions, I think raise your virtual hand to ask a question, and you'll be let into the queue. The first question from Rishu Dhawan. Console, can you take that question, please?
Hi, good afternoon. Thank you. Thank you for giving me the opportunity to ask the question. I have been following DiGiSpice or Spice Money quite some time, for more than last around 2 years or so. I have been an investor into this. So my question is more around how do we see DiGiSpice turning into or generating good profits? What is the benchmark or what is the goal we have on our mind? Of course, yes. The metrics we talked about, customer GTV, the number of adhikaris, or the number of AEPS transaction, anything or everything. We are performing brilliantly in those numbers. But my question is, if I have to see it from the perspective or from the lens of how much profits we are generating, I think we are lagging behind to much extent. So I want to understand what is the vision of management that, okay, if this happens, we'll be churning good amount of cash, or if this is the benchmark. Beyond the threshold, beyond this, we'll be in a good position. So what is that we are aiming in the coming years or in the coming quarter that will potentially push us into higher orbit into the profits? If I see the employee cost, I see it has improved drastically. Of course, I understand there's a good amount of investment into the talent, the senior resources which have hired from the outside, and that's perfectly in the direction. But what is the vision for the management to make it into a profitable business going onwards? Thank you.
Sure. So I think, hi Rishu, thank you so much for the question. Let me take that first, and then maybe Rajneesh, if you want to come in, you can. Rishu, while I don't want to get into numbers, but I think directionally we see rural as a very, very large opportunity for us for all the reasons that we've spoken about. Number one, we see ourselves very placed to seize this opportunity. Number two, what we believe, and I think this is about how we balance growth with profitability, is on this large opportunity, we've built a business operating model, and how we're going to leverage more products and services onto this model, which will generate operating leverage for us. That is something that we've seen. What like you very well put down is that the current cycle of Spice Money for the last 2 years, definitely, and maybe as we're doing, there's been a lot of investment in building the institution for all the businesses that we are doing today and what we want to do tomorrow. I think that is where we've been trying to balance. The good part is, and I think that we take immense pride in, that the entire investment has been built from the money that we've made, the earnings that the institution has generated, the revenue that the institution has generated, and we've not been in a situation to borrow money. But we believe this model is very, very well placed to generate operating leverage as we go forward, ratio.
Yeah, so to add to this issue, I think as you also picked up, we've been investing for the potential opportunity. And I think where we are today, it's very difficult to put a timeline saying, okay, we are into investment for the next 1 year, 2 years, and then, then we'll start to throw cash. Frankly, till now, we've not driven this metric of throwing cash. The way we've looked at is that whatever investments we need, how do we make sure that they come out of the internal accruals? So we are not going from one extreme to the other, right? Like in terms of either just generating cash and not looking at the future, or just looking at the future and not worrying about, how much we can spend. And we continue to believe that that's the right way to build the business. Also, having said that, while on few products we now have an established model, I think looking at the opportunity, there are areas where the business model will continue to evolve, right? And we will keep working on evolving that. So I think that's the point. I think it's all about building for the future, building an institution which can last and serve rural India for ages to come.
Rishu, if you have any further questions. We go to the next participant. Anybody else wanted to ask questions, please raise your hand. The next question is from Chiku, who's a private investor. Please go ahead. Console, please start with Chiku, private investor. Console?
Chiku, you can talk.
Please go ahead with your question, Chief. Can you ask a question, Chiku?
I think we can move to the next and then come back to on the Chiku
Yeah.
side.
Chiku, just in case there's a issue in microphone, you can feel free to write the question on the chat box and we can read it for you.
Yes.
Yeah, so maybe we can come back to Chiku, right? Let's move to the next.
He is not there. So I think next question from Tanay Kutecha. Tanay, can you ask a question, please?
Hi, I'm Tanay and I'm an individual investor. I had a couple of questions actually. So the first question is with regard to the adhikaris that we have. So I wanted to ask what their take rate is, what like the revenue sharing arrangement we have with them. And the second question would be with regard to how DigiSpice is, say, different from a Fino Payments or um, Neogen Bank.
Okay, let me take this. So I think your first question is around what shares do the adhikari, what part of the revenue share the adhikari get. So while it is different product to product, but on an average, you would see that our revenue, our gross margin on revenue is about 35%. So I think, and major part of our direct cost is the commission that gets paid to the adhikari or the channel in between. So to that extent, I think you can say it's 2/3 to 1/3. So 1/3 we retain and 2/3 is passed on to the adhikari. But it would vary product to product as well. And the second question you have is around how is DigiSpice different from Fino? And I think you mentioned Neogen. So I think Fino, very clearly, Fino is a payments bank. We are not a bank, we are a platform. And I think that is the core difference. The other difference, so I think what I understand from your question is that you're drawing a similarity on the kind of products that Fino does, and to the extent that Fino has also uses merchants to deliver services. Yes, to that extent, there is similarity, and therefore I can understand the comparison. But the key difference is between a bank and a platform. As a platform, we believe that we have the opportunity to be able to provide products from any financial or non-financial institution. So whether it is financial services or it is digital services, and it is not restricted to providing your own product. And second, we are totally focused on rural. I mean, you can think of us as a rural digital network, right? Where we have adhikaris at every village level and they can provide or enable access of multiple types of services to the consumers. So I think that is the difference in the focus. We are really building a service delivery network in rural versus a bank, what Fino is. And I think as far as Neogen is concerned, we understand that Neogen has been an NBFC, and of late, they've been, also creating a tech platform to be able to offer services like ours to, I think, also other BC partners. So I think, again, the core fundamental difference is that we own the merchant who provides services to the consumers. And going forward, we want to own the customers and merchants as well. That's part of our roadmap. And not just provide a platform to other parties to be able to, or other players to be able to provide services.
I think there's no further questions from that participant. Kunal Shetty, you may ask a question. Kunal Shetty, next in queue.
Hello, am I audible?
Yes.
Hi, good afternoon to one and all, and congratulations on a good set of numbers. So I have a couple of questions regarding the segments. My first question would be with respect to MATM. I would like to know how are we placed currently in the segment, and what is the usual transaction size that we cater to?
Yeah. So I think as far as MATM is concerned, our understanding is that, so if you look at the whole cash withdrawal as a product, which is primarily a rural product, it's a mix of APS and MATM. And within cash withdrawal, we believe that we are the leading or the leaders in the market. In terms of the ticket size, Kunal, the MATM transaction, the ticket size per transaction is roughly around, it hovers between 3,300 or so. I think that's the amount of, that's the number, between 3,000 to 3,500. That's the kind of range.
Right, right. Thanks for that answer. My second question would be something related to bill payments. So bill payments have been observed to be performing better this quarter. So according to you, what has led to this growth, and what run rate can we expect this segment?
Yeah. So I'll answer that, and Sanjeev, then I would want you to come in as well. So, you know, as we said, the key contributor to growth in bill payment. So there is an organic growth as well, which you see, which is the standard utility bill payment category. That is because of the growth in network and, you know, as we grow on other metrics. But the key reason of a major growth is a new product, is a new category within bill payments, which is EMI payments.
Right.
That category has got recently, you know, enabled on the bill payment platform. I mean, technically it's been enabled for a year, but, you know, the whole ecosystem is not.
We've lost Rajneesh, I think. Kunal, can you hear me? Sorry, Rajneesh, I think your network froze for about 30 seconds. You were talking of collection, so you'll have to say that again.
Okay, sorry. So I'll just repeat. So I said this category, this EMI collection category has started to show results recently, because, and especially for us, because, you know, we operate in rural, and there are microfinance enterprises, microfinance companies, microfinance NBFCs, right, who lend to primarily in rural. So we already work with them when it comes to enabling a enterprise cash management product, right? So the core model for MFIs is that their collection officer would typically go to every village once in a week or 15 days or a month, depending upon MFI to MFI. And they will collect EMIs in cash. More than 95% of collections of EMI in microfinance is cash. That's the industry number. So they would collect it in cash. The traditional model was that they will go back to their own branch in the evening, deposit that money with the branch. The branch guy will keep it, you know, in branch overnight, and the next day somebody in the bank will pick it up, or they'll go and deposit in the bank, right? With the enterprise cash management product, what we did was that now this collection officer would collect, right, and would be able to now deposit to the nearest adhikari in that or a neighboring village, or he would go back to the branch, and the branch guy would immediately then, you know, be able to give it to the adhikari, and the MFI will get the same day credit of that amount as well. So it's not lying idle overnight. Plus, it helps in saving cost, you know, of the collection officer having to go back to the branch. It also helps in, you know, all the risks that the collection officers take by taking a large amount of cash and then storing it in the branch. So that was where the enterprise cash management product come in. The EMI collection product, which is part of bill payment, is where the customer can themselves now go and deposit at the nearest adhikari, right? So it's like a 2,000 rupees EMI, which the customer can now directly go to the adhikari. And we've been actually working with a couple of MFIs initially where we've been encouraging them to encourage their customers to actually follow this model, because this saves them the whole time and cost and energy of the whole collection officer who has to just come to collect cash. Okay. So the result that you see is basically, I would say, just a tip of the iceberg in terms of the potential that this category holds. And like we've seen in case of AEPS, it's a win-win-win, kind of a proposition for everyone in the ecosystem. We also see this as a win-win-win, proposition for the ecosystem. So our efforts have basically, you've seen those results, over the last 1 quarter, and we believe that we want to really build this. The opportunity size is much, much larger than what you see today. It might take a bit of time because there is a bit of change of behavior that is needed here. But we are very confident that because it is a win-win-win for the ecosystem, that we will be able to build this business on a sustained basis.
Now, do you have any further questions? Next participant, Prakash Prabhakar. Prakash, please initiate the discussion. Your questions, please.
Hi, good evening, Shiv. Thank you for inviting over. Thanks a lot. First of all, congratulations to the team of DiGiSpice for identifying kind of, I would say, a very promising segment, and where I would assume that there is more to be done than, as just the earlier speaker said, that it's about changing consumer behavior. And I think that may be one of the most important challenges from a business point of view that the team would experience. I mean, so just coming back to the 3 pillars that you mentioned at the start of the call, which is Aadhaar, Jan Dhan Yojana, and digital payment system as being the 3 key pillars for this entire business model. My first question is on the macro level. What is the trend that you see of the average deposits which is there in the Jan Dhan Yojana? And so we know how robust the Aadhaar system is, and we also know how robust the digital payment system, largely touted as one of the most advanced and persistent, reliable payment system that India is currently boasting of. But the average balance in the Jan Dhan Yojanas, how do you see that as a trend? Is it on the rise? Is it flat? Is it increasing? Because ultimately, end of the day, that reflects the ability, the potential of your consumer, who is your customer, last customer, kind of benefit from this brilliant set of services that you are bringing to them through your adhikaris.
Sure. Sandeep, should I take it, or you want to come?
Yeah, no, you can take it. I'll come in.
So I think, first of all, yes, the Jan Dhan balances trend has been on the rise. This data is available in the public domain, and it has been continuously increasing over the years. So yeah, the trend is positive. Having said that, I think we use Jan Dhan more as a representation of the fact that every citizen now has a bank account, right? And that is like the fundamental starting point of any financial step towards any financial inclusion, right? However, that does not mean that the customers who access our services are just Jan Dhan customers, right? So if you took over a village, a sarpanch or a teacher or a village or a dairy farmer to a very bottom of the pyramid customer, all of them in a village are our customers, because the basic utility need of cash deposit or making bill payments, etc., is a need that every citizen had. So from that perspective, our intent is to bring, while AEPS or a cash withdrawal is a very horizontal product, but our intent is to, and we are working towards creating products for every segment within a rural ecosystem, right? And by every segment, we mean enterprises, both small enterprises, whether it is agriculture, right? So I think there's a lot of work in progress in that direction. So look at the potential, not just from a Jan Dhan bank account balance, while it's an important indicator, but from the overall rural ecosystem and the services that can be provided to them to improve their livelihood.
Thank you very much. That quite much answers my question. My idea of bringing in Jan Dhan was more from a point of view of that being the bank balance, being the savings account balance in Jan Dhan, being a reflection of whether prosperity is increasing or decreasing or contracting or whatever it is at the rural level. We have seen numbers of unemployment at the urban areas. And we also have some idea of migration from the rural areas into the cities, which causes different kind of problems. But But my idea was that the Jan Dhan Yojana is representative of, ultimately your services, particularly of the MFIs and those kind of things, will be tightly correlated with the disposable income that the people in the rural areas have. So that's, but thanks a lot for
Sure. We
responding
also
to that.
believe that all these digital ecosystem that is getting created, right? All the stacks, like AEPS is just example of one stack which we picked up, and it enabled us to reach all the villages, right? 2 lakh villages, right? It is because there is a hook product that got created. We believe that with all this digital stacks getting created, as a nation, we should be able to move in the direction of solving this problem of people having to move from rural to urban to be able to earn their livelihood. We've seen that very successfully during COVID, while that was a event that nobody would want again. But we saw that, and we also saw, in fact, a lot of our adhikaris coming back to from cities back to the villages, becoming our adhikaris, and they're deciding that they want to stay there and do this, right? As a one example, right? So I think the pace at which all of these new digital stacks are getting created, I think we do see we do have a lot of positivity around that. This problem statement can also be solved of enabling the livelihood within rural without going to.
So thank you very much. That's very encouraging, and my really good wishes to you for that, because that's like not just providing a financial services of fintech company, but almost actually solving a large problem, the nation's problem. Coming back to the next question that I had, these adhikaris who are, like the grocers or the person who is slightly educated, actually has some kind of an influence in the village level. And typically we also have an idea what kind of people have an influence in the village level. So, like I frequently go to my village and try to speak to people and understand what the nerve of the thinking over there is. My question to you is that from the numbers that you gave, is like you have about 35% margin on the revenues that you create. And out of that, about 66% you share with these adhikaris, which is 33% coming to your kitty and 66% going to them. Do you currently face any challenge? And obviously, I would assume that because you said that this payout is different for different kind of principals, services being provided or products being sold of principals. Have you, from your data analysis, been able to identify any kind of bias in the kind of product that these adhikaris push? So the reason why I'm asking this question, from my personal experience, I'm not a great believer of mutual fund investments. And I find that most of the fund managers are not actually doing service, whether it is an insurance-driven product or whether it is a pure SIP or investment-driven thing. The kind of allocation that they make to companies is actually appalling. And they destroy a lot of value of the, people who trust them with their money, with their life savings. I often tease my mother that you trusted the insurance agent, then you trusted me. And she feels bad about it. Why did she buy a Bajaj insurance product, or why did she buy a life insurance product? So the question is, because the income that generates to these adhikaris is different for different, so they have a reason to kind of push a particular product and not push another product, and they will, I will assume, have a lot of influence. Do you play some kind of a role in educating them, or even do some kind of a screening on the kind of products and services that you bring on the platform, the supply side? You have some checkpoints for that.
Sanjeev?
So Prakash, sorry, let me answer that. I think your question is around 2-3 things. But first, let me point out one is, because of this adhikari network, there's a lot of community trust that they hold. And what is the role we play in ensuring that the products that they offer from their network to the consumers are not of ones which is, just being pushed because a product manufacturer wants to push it for a higher earnings, revenue, commission, whatever it could be, for example, right? And I want to come in there, Prakash. So I think you're absolutely correct. If you look back at our business model and the way we are at least looking ahead, we're very conscious of the products that we want to offer on our platform. There are a lot of products that we have ourselves not got into for multiple reasons. It could be the complexity of the product to be explained, number one. Right? Or even the fact that there are a lot of products which probably will get sold when you are able to establish the kind of trust, and there is a brand that gets associated with it. So our product journey is factors in that part that you spoke about, being very conscious of what rural Indian consumer will want and can be offered through a network. That's one. Second, So I'm answering that point is we're very conscious. We do not just, so there are many product manufacturers, because we are a rural network, there are many product manufacturers come to us and says, why don't you put that product onto our platform to offer? We are very conscious about it. We don't believe in that process of just onboarding a product. Number two, which is also important, and I would want to elaborate that we're very, very clear that the products that are offered to rural India is very different than what the products offered to an urban India. So what we do, and I had spoken about it, is there's a lot of, even for a vanilla product, there's a lot of customization that we do in our own thinking of the way we design a product to be offered at the end, before it goes live on our network. So I hope I've been able to answer that question, Prakash, but yes, we do filters at our end. Second point, you spoke about training. Yes, we have a calibrated training approach depending on different products. Right? Depending on different products. So depending on as we are moving from a basic transaction business model of, let's say, just cash deposit, cash withdrawal, wherein the training requirement was not as much, to moving into banking, collection, we are hand-holding the adhikaris, we are getting into training and then onboarding them to offer and then distribute those products.
Right, thank you very much. Very, very useful. Thanks a lot. Just one final question. What is the unit economics at the adhikari level?
So Prakash, the way, so we are a transaction unit economics positive model. So as I said, on every transaction that happens on a platform, we get paid mostly by the service provider, in some cases by the clients, like in case of MFIs, the clients would pay us, or in case of remittance services, the customer would pay, but mostly it is by the service providers, and a part of it is shared with the adhikari. So on a transaction level, we are net unit economic positive. At an adhikari level, we do not really, when it comes to adhikari acquisition, our acquisition is through what we call partners, or I mean, typically you can also refer to them as distributors, who would go to merchants and convince them to become adhikaris because there's an additional earning opportunity. These partners also earn as the adhikari earns, right? So they get some share of what the adhikari earns. So we do not spend upfront on acquisition of an adhikari. So to answer your question, if you ask me what is your acquisition cost of adhikari and how much time do you recover, we would say, we recover from the first transaction itself because we're not spending any direct cost. Now, having said,
so you basically have an almost infinite ROI on the.
Absolutely.
There's no cap. There's no capital.
In a typical, you would say, okay, my customer acquisition cost is 1,000 rupees. First year, I'll not earn anything. Second year, I'll earn 100 rupees. Eventually I'll earn 5,000 from the customer, right? So fundamentally, that's the difference in this business model. Now, having said that, we do invest in making sure that we are able to cover the geographies that we want to cover, right? Because we have to cover right till the village level. So we do invest in people at the ground level, at a district and block level, who work with partners to make sure that they work in line with the company strategy, right? In terms of coverage, in terms of new product that has to be enabled, etc. Right? So that touch on the ground is there. But that does not mean that to do any transactions on the platform, there is a person needed who will go and sell something to the adhikari and then only he'll buy, right? So the transactions continue on their own. You can think of like our district leads or block leads as people who would do market making or, roll out
the brand. The brand pull is very useful.
I mean, they also, I mean, they do multiple things, right? So there's a person who will, if somebody comes on board and he doesn't know Spice Money, right? So they'll create trust with them, right? They'll handhold them on any complex product, right? They'll also make sure that because we are a regulated entity, so there are compliance. So they'll just make sure that whatever needs to be done is executed on the ground. But from a unit economics model, if you will put it on a spreadsheet, you're right. It's an infinite ROI from that perspective.
Fantastic. So one last question from there. You have been in operations for some time now. What percentage of your revenue is like an annuity income coming? Like, like you acquired a customer, he bought a particular product, a fintech product, particular financial inclusion product, let's say insurance product or whatever it is. And there is a repeat purchase happening, through the adhikari or whatever. So, so your 35% is annuity income. I mean, it's a transaction income, but out of the transaction income, how much is repeat? Previously, so transaction which previously initiated.
Yeah. So let me answer that, Prakash. So let's understand what has been our priority till now, right, as a business. Okay, our first priority has been to make sure that we reach every relevant village in the country with a product which is a hook product, which means that the adhikari is interested in providing that product and the customer is interested in going and accessing that product. And that product we found was cash withdrawal with a mix of AEPS and MATM from that. Okay, so our first priority has been that. That has got fairly established. It's on an auto mode where we continue to grow in more and more villages. As we said, we are in 2 lakh, the country has 6 lakh villages, right? So that is one, you can say, one priority set which has been set into the motion and it's into an auto mode. Okay. The second priority for us now is to enable adhikaris with those products which we will call evolved financial services products, right? So enabling customers to, for example, open bank accounts, and not just open bank accounts, but ensure that there are balances coming in there, right? That is one example. Enabling customers to get credit, from lenders, right? Enabling customers to buy insurance, etc. I think in the order of priority, we are currently working on enabling, liability products and asset products. And we believe that, insurance still needs a lot more work to be able to deliver it in a manner in which it can create impact. So that's how we are right now working. To answer your question, in our current numbers, it's largely transaction driven. Having said that, in terms of number of in terms of repeat, our numbers say that 2/3 of the customers every month are actually repeat customers. They've transacted with us before, and it's because we are adding to going to new geography. There are 1/3 customers which we are adding, right? So there is a repeat customer, even if right now the customer is coming from a similar set of products. So the set of products are come and do cash withdrawal. When you're doing cash withdrawal, make a recharge top up, or come twice in a month to do a recharge top up, and then come for a bill payment top up. And then hopefully now it will move into, okay, let me open a bank account. Even if you have a bank account, there are many reasons to open a better, bank account and engage better with the bank account. Can I get credit from this adhikari, right? Or through this adhikari, can you help me get credit? So I think that is the mode we are following within financial services. And then of course, on digital services like travel, okay, can I book my train ticket here? Can I book my flight ticket here? A lot of airports are, number of new airports are coming up in smaller towns now. So I think that, and then tomorrow, can I do e-commerce here, right? So as ONDC is coming up, it is democratizing commerce, right? So can this adhikari help me do commerce? Or can my adhikari, he's also a merchant, right? Can he buy better? Because we are enabling him to buy better directly from a wholesaler in Mumbai versus going through multiple chains, right? So all of those areas is where we are working on, in terms of enabling more and more products onto the network.
Yes. Well, thanks. Thanks, Prakash. I think he's offline now. I think next question from Chiku, and depending on the time that we have at hand, we can take a couple of more questions as well. So, Chiku, can you unmute yourself and start? Again, there is no response. I think next question.
I think mic issue maybe. Yeah.
Yeah, looks like that. I think Akbar Patel. Next question from Akbar Patel. Please ask your question, please.
Hi, sir. Thank you for the opportunity. My question. Hello, am I audible?
Yes, Akbar.
Yeah. So good afternoon, everyone. My name is Akbar Patel. My question is regarding the indirect costs. We have seen a growing trend in past few quarters, which I understand is due to investments in new segments. I wanted to understand, when do you see this cost stabilizing?
Sunil, you want to take that?
Maybe I'll come in.
Okay.
So Akbar, I think when we are investing, the investment is largely going in 3-4 areas. So one, of course, as you called out, is new segments. So basically, we are putting teams to work on newer areas like banking, credit, travel, etc. And it does go through a process of finding the right product market fit before it is ready for scale. So there is a bit of gestation. So as Sanjeev earlier mentioned, it's not like you pick up a product from anywhere and put it and it'll work, right? So it doesn't happen that way in rural India. So there is a bit of gestation period that happens with the new segment. And we are also building a direct-to-consumer digital payments platform, which will work along with our Adhikari platform. So I think that's something that, those are areas of investment. But I think also fundamentally, we are also investing in network reach. So going to newer geographies. Our goal is to be present in all the villages, in the next 2 years, be present in all the villages which have a population of, say, more than 1,500 people, right? So that is one area, which is around network reach. The second area is around technology, both in terms of people as well as the technology infrastructure and tools that we deploy. And most of our technology investments are in the OPEX model. I mean, most of our investments are actually in OPEX. Therefore, you see them in indirect costs and not in CapEx. Also, not too much, but we have been consciously now investing around building a brand. Very little right now, but yes, there are some investments going there. So I think the investments are going in also building Spice Money as an institution, which is not just focused on what the current product is and what the earning out of that is, but also going forward. So we would want to very clearly call out that, the way, I mean, as I said earlier, the way we are treating it is that there is a certain investment needed. We see an opportunity. We put a team behind it, and we make sure that we are not overly going overboard in terms of what resources we have and where we are investing. So that balance we are making, but we are not doing it because we are not operating the business in a manner that we have so much EBITDA target, or we have to achieve so much EBITDA or cash, and therefore we cannot invest in an opportunity that we believe that there's an opportunity. So we are not driving EBITDA as of now. I think EBITDA is a resultant. To answer your question, when will they start to see results? I think the investment that has gone or is going into building an institution, I think that's like building an institution to last, right? So you will see those results in more in sustainability than in saying, okay, when is it going to convert into revenue? As far as new segments are concerned, the gestation period for every new vertical is between 12 to 18 months before it can start to deliver meaningful, before it is ready to come at a stage where we say, okay, there's a product market fit and then let's scale. And the scaling up time period is anywhere between 6 to 12 months, right? For example, if you've tracked us in the past, in 2019, we launched this MATM product, but it actually showed significant results in the year 2020. And, that is when it should really showed growth. When it comes to this enterprise CMS, we invested in the year 2021, and in the year 21-22 is when we actually saw the results. So likewise, there are at least 3 or 4 new areas on which currently we are working on. And this is the kind of gestation period before you. So it's very difficult to call out as Spice Money when everything is ready, because there are so many threads that are moving forward. And we will also continue to add more threads where we believe that there's an opportunity and to solve for that.
Akbar, are you done with the questions? Any further questions from you? Okay, we'll move on to the next question, which is coming through the chat box from Chiku, who was unable to ask his questions previously. The first question from Chiku is, as you're one of the largest players in the AEPS segment, is there any plan on entering the UPI segment in rural India? And if yes, then will it be B2B or B2C products? And what are the time period for any such plan?
Yeah. Sanjeev, do you want to answer that, or?
No, you go ahead.
Okay, so just to repeat, so the first question was, are you the Shiv? Sorry, can you repeat the question?
As you're one of the largest players in the AEPS segment, are you already established there? So is there any plan to enter the UPI segment in rural India, and whether that's going to be B2C or B2B products?
Okay. So Chiku, yes, we are the largest player in the AEPS segment. We are the leaders there. So that's the answer for that. Are there any plans to enter UPI? The answer is yes. We are currently working on product development of a product which we believe is the right product market fit for the rural. It is early days because right now we are doing product development, and it will go through its own phase of testing. At the same time, we also understand and we all know that as of today, UPI does not have an economic model because by the government has made the MDR zero, right? So the only way any UPI player makes money through payments is when you get, when the merchant pays an MDR and the person who's onboarded the customer, the issuer or the UPI player, they get paid. So as of now, while there is no economic model, we believe that we have insights into areas where we believe the right product can be built. This product is being built on our PPI license. So we have a PPI license. We've carried this license for a long time, but till date, we did not really see a large rural opportunity to be able to start offering digital payments. There have been few regulatory changes in the PPI product last year by RBI, which now enables PPIs also to come up with UPI, basically making PPI interoperable. And now we believe that there's a product market fit. Is there an economic model? In a pure direct to consumer, as of now, it seems there is no economic model. However, the whole industry believes that going forward, there will have to be an answer of, returns to players who, onboarded customers on UPI. So we will watch that. However, having said that, we also believe that there are core use cases in rural enterprises that we can solve with that platform with a mix of PPI and UPI. And we are in the process of understanding those and also initiating pilot in at least one of those. And, if those pilots move forward, then there's an economic model on that, right? So to answer your question in short, are we moving into UPI? The answer is yes. Is it B2C or B2B? The answer is both. And third, when are we going to scale it up? I think it's going to be a function of both us finding the product market fit as well as the economic model. So in terms of the time frame, I think you'll have to continue to, we'll keep updating the forum on a quarterly basis on that.
The next question from the same participant. Is there any plan to open Vakarangi Kendra type of branches in rural India or franchises model?
So let me take that. As of now, we want to continue to stay on what we have, the way we build Spice Money, which is hinged on entrepreneurs. And we don't see any reason for moving out of that. But if there is any, we'll evaluate. As of now, we continue to build the way we build Spice Money.
Great. And the last question, what's the development on Tarya partnership? It's been 1 year since you partnered with Tarya in FinTech.
So both Spice Money and Tarya are committed to build this partnership and build a business together for rural India. We are at stages of evaluating and working on finding the correct segment and the product market fit. So there is a process. There are certain steps we've taken together to evaluate the business model, the segment, and all. So we are working towards it. We're committed to make this happen.
Well, thanks, Sanjeev, for your responses. And I think that would be the last question. There are no further. There is a question from Prakash Prabhakar, who had got cut off previously. I think question from Prakash. Please go ahead.
Hi, Shiv. I just came in to say sorry to everybody because, like as you may have noticed, I was not at home and I didn't realize the battery had completely drained off. So thank you very much, everybody, for your rather elaborate answer. I think you had already answered my question, so I don't think I would have missed much from the response. But I just wanted to apologize for getting cut out abruptly.
Okay, thanks, Prakash. Okay, we close the discussions today with the last questions from Prakash and Chiku, and I think we handed over to the management team of DigiSpice and Spice Money for the closing comments.
Sanjeev,
anything you'd like to say to close?
No, so thank you so much for everyone who participated in this conversation. Just want to summarize, like I said earlier, we see rural India as a very, very, very overwhelming opportunity for us. We see ourselves very well placed, and we continue to build Spice Money as an institution, which is going to solve the problem of access for 1 billion rural Indians. Thank you so much. Thank you so much for joining.
With that, we'll close this discussion. The call is, you may log off now. Thank you.
Yeah, thanks a lot.
Thank you, everyone. Thank you.
Thank you, everyone.